Hi, it is Monday the 27th of October. It's now 12:30 UK time. I've taken one trade during London session, which was a XAU USD sell position, so a gold sell position. Kind of micromanaged it a little bit, just due to the fact that I was on daddy duty this morning with it being half term, so I wasn't able to be at my desk monitoring the position or doing full analysis like I usually would. So just kind of saw the position, took the position, and then decided I was going to micromanage the position to make sure that it went well. So I'm going to jump onto the charts with a seamless transition as always, and then going to break down why I took it. Bang, there we are. I'm not in the middle. Now in the middle. Right, so this was the position that I took. So breaking it down, if we just jump to the daily quickly. Now, any sell positions on XAU USD at the moment would be heavily counter trend, especially from a higher time frame perspective. You can see that overall XAU is pretty much just only up. We've just been steaming upwards and upwards and upwards. And what we have noticed over the past kind of week or so is a slight slowdown, which is normal because no asset is capable of only going up forever. Over time, we need to see impulses, we need to see corrections. That's how a bullish market is formed: higher highs, higher lows, higher highs, higher lows, and we move like this. So at the moment, currently with gold, we put in this new high around 4,380. We then liquidated that high and saw quite a strong sell-off to the downside. And I've kind of been riding the gold sells a little bit from where we broke this level of structure here. To be fair though, that's not the main level of structure. This is the low that put in this high. So anywhere within this range, we could still consider bullish. But as long as we're following the lower time frame structures and kind of getting breaks of structure on the lower time frames, with this momentum that gold's showing at the moment, sells kind of make sense. You just have to be really cautious, which is one of the other reasons why I decided to micromanage this position that I was in this morning. So anyway, what I saw when I came in this morning was through, let's try and get this right. Through Tokyo, we didn't really do a lot. We kind of just had this kind of level of movement here, but then when London opened, we got quite a sharp spike to the downside, breaking this key level of structure right here. So once we broke that key level of structure and took that liquidity, I was waiting to see if we saw some sort of reaction, because what usually happens if we take a significant level of liquidity, being a daily low, weekly low, any key level of external liquidity, daily, weekly, monthly low, or a significant level of internal liquidity, what you want to see is, price might take it, and then we see a sharp impulse, which would then indicate that potentially we are going to start pushing to the upside once we've taken that level of liquidity. But what actually ended up happening when we did sweep that low is price just stalled. So London gave us a nice drop below this low right here, and then price just sat still for quite some time. What I did at that point is I zoomed into the lower time frame structures and had a look at what's actually going on. So we can see that this is our level that we broke below. So we came below that level and we created, this is our nice spike to the downside. We then created a really nice lower high. So we created this high right here, and then a massive for that time frame, massive 5-minute bearish engulfing candle. And when we got that massive bearish engulfing candle, I just waited for price to pull back up just that little bit, because we had a tiny little imbalance between where this candle closed and where this candle opened. And I just wanted to get a little bit of a better entry, especially selling from what is almost the point of the lowest the daily candle had been. It's kind of risky, but because we saw that nice bearish engulfing candle, the key level, London already showed quite a lot of momentum. I figured I'm probably just going to keep going lower. So I took that sell position there. My stop was actually a little bit higher than this. It's just I moved it as I trailed my stop. So actually, no, that was where my stop was, above the highs right here. So that is the main reason why I waited to enter a little bit later, because I wanted to get my stop above these highs and for it to not be that big. So that's what I did. Then originally my take profit was a little bit lower, but as I said, because I was on daddy duties today with it being half term, I wasn't able to be at my desk, I wasn't able to monitor the position. Although I do set and forget on most trades, I was just very conscious of the fact that I couldn't give it the concentration that I'm usually at my desk, and I do other things, but keep an eye on it. It's on one of my monitors. I was not able to do that. I was downstairs playing with my children. So yeah, we kind of filled that little gap right here, and then I just realised how creepy what I just said sounded. I was downstairs just playing fun times and stuff with my kids. Still sounds weird. I'm so sorry. Anyway, so yeah, then I entered in at this point right here. It was almost game over. We spiked up. At this point, I pretty much thought we were going to get taken out. But yeah, the market started to continue lower. But the way the market was moving for me, even on the higher time frames and this lower time frame, these candles didn't have a lot of momentum. They didn't have a lot of power. There wasn't a lot of convincing sell strength. So we go to the 15-minute. Again, we did start to see quite a nice bit of push on the 15-minute, the 30-minute, couple of candles that were nice. We had a lot of upside rejection, a lot of wicks to the upside, which could leave liquidity. So basically what ended up happening is, at the moment, because in the UK we have moved our clocks back, the US have not yet, which means that for us in the UK, London still opens at the same time of 8 a.m, but because the US haven't changed their clocks, we get New York open at the 12 o'clock. At least that's what time I have it down as. So 12 o'clock, which means that usually I would have a gap between about 10 and 12 where I wouldn't trade, but obviously now I only get a gap of an hour between about 10 and 11 where I don't trade. So we know that when New York opens, there is some volume pre-New York and New York open. There's some liquidity that comes in, there's some volume, the market likes to move, which is what we started to see here. But because we had a nice candle closure on the 15-minute, and we had that nice stab down on the 5-minute, just decided at that point, after seeing that I was going to close it out. It was at 2R anyway, 2.03. So I was happy with taking the 2%, especially with the fact that I wasn't at my desk, and with New York open coming. I was just thought, take the profit. New York might move against me or whatever, but if I can't be at my desk, I'd rather take 2R for the day, which is great, than leave it open. It would have taken me out of break even, so it was actually the right choice. But yeah, that was the position that I took today. Slightly frustrating. Kind of micromanaged it, but proved that the micromanagement that I did actually pay off for 2R on that one. Annoyingly, for some apparent reason, there was a bit of a discrepancy on my trade assistant. So the trade assistant tool that I use here, for some reason, when I opened the position originally, there was way more risk on the table than should have been. So I closed out a portion of what would have been I think I actually ended up putting in 1.5. It said 0.5 here, and I put in a 1, thinking it was 1%. So I ended up risking more. So I closed that out, and then actually ended up on my phone when I was micromanaging it, closing this out, closing all positions by accident. So on my Quantecal account, I only actually ended up taking 1.5%, but on my personal account, that one took a full 2%, so a bit of an odd day, to be honest, but you got to take it with a pinch of salt. Well, not with a pinch of salt, got to take the rough with the smooth. I don't know, enter a cliche here that goes along with what I'm trying to say. Still profit, so I'm happy with that, especially when the analysis wasn't great and I wasn't able to be at my desk, but got full 2R on the personal account, which is the bigger win. So yeah, that's pretty much it. I'm not going to be trading New York because the little one is currently asleep and he will probably wake up because I've stood here jabbering on. So yeah, that's that. So yeah, cool. Thanks. Love you. Bye.